Welcome back to my channel. I am Prerna and I am on a mission to make India talk about money without any tab. Today we are going to discuss about some mistakes which every new investors make, and these mistakes should be avoided in stock market. Okay, number one thing is a penny stock. So what exactly is a penny stock? In Indian market, any stock which is generally below rupees 50, we call them a penny stock. Now what happens when you are a new investor, you don't want to put in a lot of money in the market. So you start investing with a little amount and you start buying these penny stocks. There is lot of rumors about penny stock in the market all the time, and these stocks are easily manipulated. Why? How that happens? Suppose a stock is of very less price, it is very easy for people or some small traders to tell that this stock is going to go up, and a lot of people start buying it. And as you know, the more the demand, the price will start increasing and people start thinking that this is going to give return. But suddenly someone who has made a huge investment, they withdraw their money and other people go into loss. So this is just in a brief. If you want me to explain penny stock in detail, just let me know in comment section and I'll do that. But my biggest advice is, if you are a new investor in a market, do not start investing in a penny stocks. Number two is waiting for way too long for the starting your investment. You should start investing in your life, in your career, as early as possible. The sooner you will start, the better it is. Why? Because of the eighth wonder of the world, which is power of compounding. Suppose you have invested this much amount for 5 years, you will get this return. But if you have invested this amount for 10 years, you will get this return. Leave that. If you have invested this much amount for 30 years, you will get this return. So it's a huge difference. It is all about power of compounding. Number 3 is people get greedy. It happens when you are a new investor in the market. It happened with me also, honestly. But from my experience, I tell you, do not do that. A lot of people will tell you to put a stop loss, but I will also tell you to have a stop gain for yourself. You need to identify how much percentage of gain you are looking from this particular stock. Suppose you bought something for 100 rupees and you set a target for 180 rupees. Now what happens once it reached 180 rupees, you saw it has reached 180 rupees and you became greedy. Now it is going to 200, you became more greedy, like it will go up, then 210, and suddenly one day it falls to 190 or 180, 175, and then you panic and you sell. So ultimately you sold in loss. So it's always better to set a target for you and adhere to that target so that you don't regret it later. Okay. Number 4 is not taking benefit of buybacks, dividend paying, and bonus shares. Okay, this is something very important and very less people I have seen talking about it. If you are in a stock market, if you are tracking stock market, always Google and track which company is going to announce a buyback, which company is going to announce a bonus, which company is going to announce a dividend. If you are not familiar with all these terms, put in a comment section. I'll make a separate video on the term section. Also, I talk about a lot of financial terms on my Instagram, so you can follow me there as well. So you need to keep track of all these things, when bonus is being announced, when dividend is being announced, when buyback is being announced, and you can invest or buy these kind of shares. These kind of shares give you very good return. I'll give you an example of bonus. Like if you have 1 share, they give you 1 bonus share. If you have 2 shares, they give you 2 more. If you have 8 shares, you get 8 more. And that is how the bonus multiplies the number of shares you actually have as well as your returns. Next is not aligning your goals with your investment. I cannot emphasize more on that. Suppose I'll give you a very simple example to understand this. Somebody wanted to make an emergency fund and they invested in stock market, equity market in the month of in 2019. In 2020 market crash and that person wanted to withdraw that money because he lost his job. What happened? You have not aligned your goals, which is of emergency fund, with the kind of investment you should make. You should never make an emergency fund investment in a high risk fund. Now when you withdraw the money, your money is lower than sometimes even the capital. So you have to align your goals. You should not put a very high stake funds, very important funds in equity market. Your investment should in the equity market or stock market should be for long term goals. Okay, I hope I made sense till right now. If you liked the video up till now, hit a big thumbs up and subscribe to my channel. It motivates me to make more such videos. Okay, so the next one is listening to all the financial advisors and the gurus blindly. Okay, I understand there are a lot of people like me on YouTube and social media who will be giving you advice, but I'll tell you, it is very important to analyze things yourself before getting into any kind of hearsay or listening to any person who claims to be a financial guru. That brings me to my next point itself, which is having a financial literacy. Having a financial knowledge is very important when you are in a stock market. I won't say you need to be an economic graduate, but basic knowledge is important. You should know what is profit before tax, how much sales company is making, how much asset company are having, how much liability company is having, so that you get a clear idea how this stock is going to perform in the future. Next one is diversify your portfolio. So what do I exactly mean by diversifying your portfolio? Just not invest in one kind of stock. Besides that, just don't invest only in stocks. Go into other kind of investments as well. It will give you, it's a very famous saying by Warren Buffett, do not put all your eggs in the same basket. So what happens in such scenario, it will give you benefit of the different changing scenarios. Like in the lockdown, when the market went down, even though the stocks were not performing well, the gold was performing well, right? Similarly, when the gold does not perform well, maybe real estate is performing well. So diversifying your portfolio is very important. Okay, next is, as I said earlier, also all millennials have so many slangs, XOXO, FTF, WTH and what not, but you guys are not familiar with the financial terms or slangs here. I would say upgrade yourself. There are certain terms, basic terms, which every millennial should know, and just try to learn about them. And I'm coming with the concept of word of day every day on my Instagram, so you can follow and learn there as well. Having a knowledge of basic terms is important, because if you read a newspaper, if you watch a news channel, if you are into some conversation about stock, at least you should understand what people are talking, so that you can make more sound decisions. And the last thing which I want to talk about is patience. People get very impatient and they sell on low, buy on high, they sell at the wrong time, they buy on wrong stocks, they want to make easy money. There is no easy money in stock market, always be aware of that. All those overnight getting millionaire stories are not true, trust me on that. So with that, we come to an end of this video. I hope you liked this video. If you liked it, give it a big thumbs up, share it with your friends. Everybody should know all the millennial terms and should avoid these mistakes if they are new investors. Subscribe to my channel, it's free, do it right now. Subscribe. Okay, until next time, take care, bye bye.